Hello, fellow Robo Capitalists. Hope you're well. So, we have a lot going on in the news. Obviously, what happened this weekend in the Middle East, Iran's retaliation. I believe they just sent missiles to one of our bases, which was oddly considered by the markets a de escalation. But the bottom line is whether it's the bond market, whether it's Bitcoin, whether it's stocks, we have massive amounts of volatility. So we have to ask the question, why did this happen to begin with? What are the markets concerned with? Why are they not concerned now? And how does this end? What are the probabilities here with what's happening, not just in the Middle East, but maybe more so specifically the Straits of Hormuz? This is what we really, really, really need to think through, because if this is blocked, and that's a big if, we need to understand that this could disrupt global trade and the flow of oil, not just to the United States, probably more importantly to places like China and to other places outside of the United States. And what does that do to not only the domestic economy here, but the global economy, and therefore interest rates, the Fed? I mean, this all ties in together. So let's first and foremost go over let's go to CNBC, and hopefully they've got kind of a play-by-play. This looks like the best we can do. And then we're going to go over how asset prices have really moved and bounced all around. Wait till you see the price of oil. Last night, I believe it spiked up over 80, and then today it crashes while Iran is retaliating against the United States. So Trump announces Israel-Iran ceasefire timeline. He says we'll end the war. Look, I have a hard time really believing anything that Trump says, because one of his superpowers, I guess if you want to give it to him, is negotiation. But the way he negotiates is by saying all of these things and then not doing them and doing some, and you never know where he's coming from. So whether you like him or hate him, you have to admit he'll just say things, even if he doesn't mean it. And then sometimes he follows through, sometimes he doesn't, sometimes he does the complete opposite, sometimes he contradicts himself and does something different the very next day, within the hour. So if I'm setting up a portfolio and if I'm really serious about figuring out what the probabilities of certain events happening, and not just playing politics or being tribal or just having just being on the red team or the blue team or whatever it is, if I'm objectively trying to figure out the probabilities, I don't know that I can take Trump at his word. I just can't. So I've got to kind of take it with a grain of salt here. At the very best, I can try to look at it and say, well, what is he really meaning? What are his objectives here? And try to figure out what his intentions are, more so with his actions than what he's saying. Because again, we all know that Trump will just say anything to achieve a specific objective. So I guess here's the first quote. I don't even want to read a quote because, again, it doesn't really matter here. Let's just try to find out the details as to what's actually happening here. So Trump announces everything on Truth Social. I don't know if that's great. I mean, that might be great for negotiating tariffs, but is it really great for trying to negotiate things that could potentially lead to World War III? I don't know. I'll let you be the judge. Okay, so this is good. So Qatar closed their airspace. It looks like they opened it back up, which means that they're not worried about a short-term escalation. This gentleman is talking about how companies need to be on high alert for cyber attacks. I mean, that makes sense to me. I mean, you've got Iran obviously is at a disadvantage, and they are basically isolating themselves. I'm not saying I'm for or against them. I'm just kind of making an observation. I mean, even Russia, that was one of their allies in the past, said, Putin, and I don't know, maybe he's changed his mind. But what I saw from him yesterday was him coming out and saying, look, we're their ally, but we're not going to step in and get involved here because 2 million people, I don't know if that's correct, but he's saying 2 million people that live in Israel speak Russian. It's like it's their second language. So we have a lot of our citizens are Russians that live in Israel. So he said, I'm going to take that into consideration, meaning I'm not going to get involved. Now, again, maybe he's doing the same thing Trump is. Maybe he's just doing that as a negotiating tactic. We'll have to see with his actions what actually happens. But it seems like Iran is kind of isolated right now, and maybe, hopefully not, but maybe they get more desperate, and you got to ask yourself, what can they possibly do? And that may be a release valve. So Iran's leader issued defiant sounding statement, but again, they're all politicians, so he's going to do the same thing Trump's doing. He's going to come out and say whatever he thinks he needs to say to appease his population or his political party, whatever his political agenda is. He's going to say whatever falls in line with that. It's not like he's going to tell you the truth just because he's a moral guy and he's all about being honest and principles. I mean, none of these politicians are. Let's just call a spade here. So market rallies, oil falls after attack. And this is something I want to point out that basically the market did the exact opposite of what you would expect. I mean, last night, people were talking about World War III. People were talking about the stock market crashing. They were talking about oil going to 120. Like I said, I think last night oil got up to around 80. And then sure enough, when the market opens, especially after Iran attacked, because the attack was considered a de-escalation. And how can that be? Because when they attacked, it was, from what I understand, the bare minimum. And it was just kind of a retaliation that they had to do just to kind of save face. But in the retaliation, it showed that they're kind of waving the white flag. And so once the market saw that, they're like, okay, this is actually a de-escalation. So we're going to price things as though we're going to reach a peace agreement very soon. So this huge, like World War III premium that was in the price of oil just collapses. And you had oil futures fall more than 7%. And we end the day, and we're going to check this out in a moment here, just to make sure that this is real time. But ends the day 68.51, when I believe last night we were over 80. And more, I mean, if you don't think the United States is just as guilty as just as guilty of propaganda as these other countries, I mean, come on here. Like, coming from the White House, congratulations, world, it's time for peace after I just bombed the hell out of you. I mean, come on. And I take what this guy is saying with a grain of salt as well. We will not submit to anyone's harassment. Okay. And a lot of this just is probably posturing for these negotiations, or what I hope will be negotiations, because I'm someone that actually wants peace in the Middle East, believe it or not. But you can't go in there and say, hey, we're defeated. Hey, we've got no other choice. Hey, Trump, you win. Now let's negotiate. And to give Trump credit where credit's due, he can't do that either. Right? None of these leaders can. So I'll cut him a little slack here. I talk about how many troops are positioned. Trump thanks Iran for giving U.S. early notice. And here's just where it gets bizarre. Like, thank you for attacking me. And thank you for giving me the heads up that you were attacking me. And if Iran is very serious about their retaliation, why on earth are they giving Trump the heads up? Or is Trump just lying and saying that? I mean, who knows? Who knows? Here's another good sign. Dubai resumes full operations at airports. So if Qatar and Dubai are opening up full operations, that tells you that they're really not worried about an escalation, at least let's just say over the next week or so, or the next few days. US oil prices fall sharply as investors hope for de-escalation. Okay, we got that. Now let's go back to the CNBC homepage and go over how the markets played out. Let's look at the S&P, and I want to look at a daily chart so you guys can see just this volatility that I'm referring to. So we started way down here, and then we had way up, and then we get over 6,000. Then we crash, looks like around noon Eastern, below 6,000, down to 59.48. And then I think that's probably when Iran did their counter strike that was muted. Then we see this big move up, and then we finished the day, looks like on the highs, where the S&P 500 was up almost 1%. So what this tells me is the market is repricing this risk and taking a deep breath. Whether they're right or wrong, I'll let you be the judge. I think only time will tell. But the way they're gauging the probabilities right now, they're thinking, okay, this goes back to what it was maybe before Israel striked Iran just a couple weeks ago. And another thing that's weird, if we go back, I don't know how far this chart goes. Yeah, it doesn't really get specific. But what's really wild is during these times, I remember the early 1990s when we invaded Iraq for the first time. I remember yeah, I was very young then, and obviously I wasn't really paying attention to stuff. But I remember the market going down and then going right back up. I'm almost positive that's what happened. Or I don't know if we call it a technical invasion, but the first time that we had this flare up with Iraq with Bush Senior. Let me see if I can go to a better chart of the S&P 500 because I'm really curious. But my point here is I don't know that when the US gets involved and we get into a potential war or an outright invasion or whatever you want to call it, I don't know that that's leads to a bear market. If my memory serves me right, usually the markets go up after that first kind of knee-jerk reaction. So, oh, good. Yeah. Let's see if I can zoom in. And you guys can fact check me here. Maybe some people that are a little bit older than I am. I believe this was the knee-jerk reaction you got. And then the market just, erase that and zooms back higher and higher and higher. It seems like that's the way it usually plays out. Now, whether it plays out that way this time, obviously, it depends on how far these things escalate or de-escalate. But I don't know that just these invasions, when the US gets involved and we're kind of on the edge of our seats, I don't think it always leads to a bear market. In fact, usually I think it's the opposite. Okay, let's go back to the huge volatility we had in the bond market. Let's go to the 10-year. And I want to go back to a 5-day chart here. Because the bond market, or the 10-year, using it as a proxy. So the 10-year, look, we're up here over 4.4, in fact, over 4.43. And then at one point today, we're trading at 4.29. We're trading under 4.3. So down 12 basis points. And I know intraday, today on Monday, we were down at one point like 9 basis points. It was a huge move down. And I know I'm beating a dead horse here, but I think it's worth asking the question to everyone in the chat right now. Why was the 10-year Treasury down today at one point by 9 or 10 basis points? That's a big move in the 10-year. Did Trump or the administration come out and announce that they were lowering the deficit? Did the United States debt somehow go down? And we just got word that was a big headline today in the news? Of course not. You guys know that the debt is going up just as fast as it ever has. You guys know the deficits are going up just as bad as they ever have. Nothing changed today about that. But yet yields went down substantially. Okay, well, why? Because growth and inflation expectations, risk off. They're doing the bond market is moving for reasons outside of supply. But what is the argument that you always get from people, not just in the mainstream media, but on social media, on FinTwit, everywhere? The debt's unsustainable. The debt's unsustainable. The debt's unsustainable. You know, they're going to have to inflate away the debt. We're going to have to do something. The Fed's going to have to come in and buy the long end of the curve, or else interest rates will blow out. This is the argument that you hear over and over and over. Oh my gosh, now we have to pay $1 trillion a year just on interest for our debt. And that's quote unquote unsustainable. Okay. And why am I bringing this up? Because the premise of each one of those arguments is that supply matters to interest rates at the long end of the curve. That's the basis for every one of those arguments. But if we just look at history, if we just look at the price action, if we look at what happens daily, the 10-year Treasury never, ever, ever, ever moves on supply headlines. Never. And it always moves on either safety, geopolitical stuff, or growth and inflation expectations. It's like, or at least, not every time, but 99% of the headlines that move the 10-year Treasury yield have nothing to do with supply, meaning bigger deficits or smaller deficits. And 99% of them have everything to do with what's happening with inflation, what's happening with global growth, what's happening with inflation, what's happening with global growth. But we see this big volatility, and then what happens after the Iranian retaliation is muted, and we're like, whew, boy, okay, we dodged that bullet, and all these airports open back up, and now the higher probability outcome is that we go into some sort of peace agreement. What happens to the 10-year Treasury? Then it goes back up. Why? Because we're not worried as much about risk. And said another way, we're less worried that global growth is going to get crushed because we're going into World War III. And therefore, you just see what happens to the 10-year Treasury yield. But we'll have to see if this volatility continues. Now, another thing that I wanted to mention today that we have been hearing kind of rumors of Fed chairs, or not the Fed chair, but Fed governors coming out and saying that, oh, well, actually, in July, we'd be okay. We'd be okay with a 25 basis point cut. Waller came out and said that on Friday. And then I believe, I can't remember the gal's name, that came out today and said that she would be open to a 25 basis point cut in July. Now, why is that big news? Let's go over here to FedWatch. And you guys see that the probability for a Fed cut is still, the probability of Fed pausing in July at their next meeting is 80% still. So could this be something that the probabilities are actually changing and the market is not pricing that in? which if you're a trader, that could be an opportunity. The market could be off sides here. So you've got to look at what these Fed chairs are saying. Let me see if I can. I keep saying Fed chairs, Fed governors. Let's see. I'm going to do Here you go. Bowman. That's the name. So I'm sure they'll outline kind of what's going on here. So Fed Governor Bowman favors July interest rate cut if inflation stays low. Federal Reserve. Okay, Bowman. Let's talk about, see if they reference Waller. Here we go. Bowman's comments are similar to those from fellow Governor Christopher Waller, who told CNBC on Friday that he thinks the Fed could consider cutting in July. Now, where this gets interesting and where I think the probabilities may be a little off there with Fed Watch, which could be an opportunity if you're a trader, is if you look at the 2-year Treasury, you see that it tanked today, the yield, but it really didn't go back up as much as the 10-year Treasury did it. So the spread widened out a bit. And this makes a lot of sense because this is right around when we got the news that another Fed governor came out and is open to a 25 basis point cut. So the 2-year Treasury is going to be more impacted. Now, over the long run, it's not impacted. The 2-year Treasury leads the Fed, not vice versa. But over the short run, when you get these swings, I think the yields are much more impacted at the front end of the curve with Fed headlines, let's say, than they are at the 10-year Treasury yield. And obviously the 2 years closer to the front end than the 10-year. So I think it's interesting that you had this big yield drop here when the 10-year Treasury doing the exact same thing, but then the 10-year Treasury goes back up and the 2-year doesn't do it as much. Why? Because the 2-year had more of this yield drop, was pricing in the additional probability that the Fed could cut rates by 25 basis points in July. And you kind of just see it playing out right here in the price action and the difference between the yield movement on the 2-year and the 10-year. Wow, man. Oh, well, I guess everyone wouldn't be surprised that we had extreme volatility here in Bitcoin. But look at what we did today. We got down almost below 100. And look at this. Just the other day, we got down in 98. I didn't know it got down that far. So I think the main takeaway here is, I love Bitcoin. I love the philosophy behind it. And I think everyone should own it to have purchasing power outside of the system. But if we're being completely objective about it, which we should be, we see that it's not a risk-off asset yet. Maybe it will be in the future, but right now it's trading like an extreme risk-on asset. And therefore, when you have the perceived risk of World War III increasing, you see Bitcoin not just selling off, but selling off to a large degree. And then when those probabilities are reduced, then you see the buying come back into Bitcoin. Again, it's just an observation. It's just acknowledging the fact that Bitcoin is not yet trading as an uncorrelated risk-off asset like you would expect gold to trade. There's still a lot of, let's say, risk appetite within the price. Now, speaking of gold, let's see what happened there. Okay, so gold, now let's see what it did intraday, though. Because I'd be surprised over the last 5 days that it didn't. Yeah, we had the spike here. That was probably. Now, I don't know if I can attribute this to really any headline other than it coming back down because the risk in the Middle East is decreasing. So maybe going back up when the market was really spooked. But then after you had the retaliation by Iran, it kind of comes back down. So this is basically doing the opposite of Bitcoin, which is telling you that gold is trading as a risk off asset. Now let's get over to oil. The big, oh my goodness gracious, look at that. Remember, I said that we would have to check this out because in that initial article, I didn't know if that was real time because it was saying it finished the day at 68. Well, now we're down to 65. Jeez, what a move. Like I was saying, aftermarket or after hours, I believe last night when the that opened up, I've heard a lot of people saying that it was trading over 80. So I'm going to assume that they were correct, although I wasn't following it because I was traveling. But I'm almost positive, prior to the open here, it was up. It got at one point, it traded over 80 due to the headlines and due to the concerns here. And then today, holy cow, what a drop. So what are you seeing here? What is the price telling you? The price is just telling you that there was a huge World War III premium, or let's say geopolitical premium in the price of crude. The increase was not due to any type of additional demand or anything like that. It was just all about geopolitical risk. So as that geopolitical risk fades away, whether that's justified or not, we'll have to see. Only time will tell, like I said. But then the price starts to plummet back down to, let's just say, real supply demand fundamentals based on the global economy. And what this is telling us, obviously, is the global economy is extremely weak because there's still going to be a bit of a premium in there. So without that risk premium, you would have to assume that oil would be trading back down below 60 in the 50s. So why do we need to consider this in our analysis? Because one of the big narratives that we've been hearing is that these high oil prices will lead to consumer price inflation. Now, what I've been talking about is maybe they will, but even if they do, that's going to lead to further disinflation. Why? Because it's all about demand destruction. And we saw this play out during the GFC during 2008. You have to consider the fact that if wages aren't going up by a significant degree, even if the price of oil goes up, which impacts almost every single thing that you buy, people aren't going to have the money to pay the higher prices. And therefore, they're going to have to allocate more money to the stuff they need, but that just means less of their paycheck is available for the stuff they want. So those employers have to start laying off people. That the unemployment rate rises, and then you have aggregate demand really fall to a level in which impacts the price of oil, bringing that down. And that's where you get the little bump in inflation, but then the disinflation that because of the demand destruction, which leads to a contraction of the overall economy. And so even if oil would have gone up to, let's just say 100, that would have been my base case. But it seems like if things continue the way they are, this is just going to be a blip on the radar. And I don't know why this would contribute to a higher CPI at the next print, which again goes back to kind of our trade that we're talking about here with an 80% likelihood that the Fed stays, because the only reason they were talking about staying is because of the uncertainty with consumer prices going up. I mean, the tariffs, that really wasn't as big of a hit as they thought it would be, to say the least. And now they're worried about the uncertainty in the Middle East. That doesn't seem like it's going to be as big of a hit. So now the only thing that you have to revert back to is just the domestic economy. And the data that we're seeing in the domestic economy is obviously coming out soft. That's what George Gammon saying. That's just looking at it as objectively as you possibly can, especially when you look at the labor market. And I think that's really the key here for the Fed's decision-making process outside of the geopolitics. Okay, guys, on that bombshell, I think what I'm going to do this Friday is another webinar within Rebel Capitalist Pro. And I had a deep dive conversation today with Chris McIntosh. That interview is going to be up on the Rebel Capitalist interview channel tonight. So check that out. That's one that you're definitely not going to want to miss. And we go over what he's doing with his portfolio based on the everything that we've discussed in this video, and what he's doing with his portfolio based on his longer term view. So it's not just about short term, but what you'll see in this interview, it's all about the midterm. It's all about the cycles that are in place, regardless of the short term noise. And I didn't really, I let him talk, and I really didn't want to interject much because he's such a wealth of information. But I do want to collect my thoughts and go over a webinar on how I might change my portfolio or what I might do in the future based on the intel I received from Chris in this conversation, which applies to Iran, applies to the Straits of Hormuz, which applies to all the geopolitical risk and the volatility that we've been talking about with all asset prices, but especially commodities and energy. So I think that's going to be this week's webinar. We'll do that 11 a.m. I think is best on Friday. And so put that in your calendar. If you want to participate, if you're a Rebel Capitalist Pro member, make sure you check it out in the forum. If you want to participate, you can just go to georgegammon.com/pro. You can do the $1 trial. And if you can't participate in the live stream itself, that will be up as an archived video in the member forum. So again, you can check that out at georgegammon.com/pro. And I'll be talking more about that webinar as the week progresses. And obviously, I'll be taking into consideration any further intel that we get on what's happening in the Middle East, which hopefully will continue to de-escalate. All right, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism, and we'll see you in the next video.